Hey guys, what is up? It's Raphael here, and today I want to backtest. I thought I just record myself backtesting, explaining the models, explaining the entries, how I trade, how I actually learn to backtest and to trade, etc. And I thought this would be helpful for you guys so you can see how you can actually backtest, collect data from backtesting and improve. So here I made a little trading journal for the backtesting. So here I put on the trade, the date, time, which model I traded, which confirmation. So this is return to zone, break of structure, supply demand, range inefficiency, and context. Here's the result, how much RR did I gain or lost, and here I can put some notes on like learnings, etc. So let's jump in. I always like to start on the higher time frame and look where we are at. Here we are trading Solana. I want to backtest Solana today, and as I said, I always start on the highest time frame. So on the 12 months we don't have nothing. 6 months I can see we have a pretty nice topping formation on the 6 months. So yeah, this looks very clean. So basically, if you don't know about topping patterns, you want like something like this, and this candle goes down. So basically this is a model 1 distribution, but on a candle bar pattern like this, yeah, this looks like this and it's pretty clean. Or we can get something like this for model 1, or for a model 1 flowing, model 1 that goes over into a model 2 and goes down. Yeah, so these are pretty nice topping formations, and I can see on the 6 months this looks pretty clean. On the 3 months there is nothing here. On the monthly I can see already some structure move up, but no real market structure because we don't have the 6 candle rule here. On the 2 week we actually have market structure. So from the down up, I won't go over this. So basically it's here. We have 2 candles going down. This is the lowest point. 2 up, 2 down, and up. So maybe if someone is asking, this is 6 candle rule because this candle opened here. It took the liquidity from this candle and showed up. So this is for me an valid market structure point. On the 2 week we broke structure here and we hit the technical target down here from this wake of model 1. And yeah, so what can we expect now? Since we had a 2 week market structure pull up and we broke back to bearish, we can now expect something like this. So basically a lower high for a lower low. And what we can do now is to look up here for a potential POI that we can reject later on. And we can analyze the market structure from here to analyze, okay, when we go up, where do we go back to bullish right here, and where do we go back to bearish? So actually we can maybe find a POI up here that we reject on. We maybe get a model up here, broke back to bearish and reject down. This is the plan. And always be aware of your higher time frame context, so you can take models with more conviction. Yeah, so we just skip through the time frames, and yeah, I can see we have valid 5-day market structure. This is our level 2 market structure, and it broke bullish right here. And now what we can expect, so our higher time frame will look like something like this, and our 5-day market structure could look like this, maybe. Yeah, it's pretty ugly, but it could look like this. And here we break back to bearish, for example. And now what we can do, we can look for market structure. As we know that our 5-day is bullish, we can expect something like this on a 5-day. And now we can analyze this market structure pool going down to see if we get an accumulation here that brings us to the next pivot point going up. So because to go from A to B, you need an accumulation, and to go from here down here, you need a distribution. Easy as that. So let's focus again here on our potential POI. Yeah, so on a 2-day, nothing. On a daily, we have, yeah, so again, up, down, up, down. This is our daily market structure pool, and what we can see that we created, or we did not actually create an order block here, but this could be an order block on a higher time frame, but we can refine it down to this. This could be a potential point of interest for later to reject on for the lower high, for the lower low. Yeah. And later on we can refine it more down. For example, we can go down on the 8 and see that we can refine it down to here. We can keep it right this, because this was the original point of interest. You don't want to refine it down to the T, but you can look on the lower time frame how the block looks. And here we can see another structured pool that sold off aggressively. So here is another more refined. Now let's go to the 1 and look if we can find something. But yeah, I think this is pretty refined, pretty nice. Here we got some liquidity, so I would expect that if we don't reject from this lower part, we will reject from up here and take this liquidity. Yeah, and if we don't reject from here, I can see that we have here a nice supply. Yeah, so these are potential point of interest. And now let's jump back to our structure pool. So this is our 2-week break of structure. This is our 5-day break of structure. And now let's see, because we know that our higher time frame is bearish, our mid time frame is bullish. So we're expecting something like this. And now we can analyze our level 3 market structure here to look where we will break back to bullish to confirm the rotation back here. Yeah, so now, I can already see we have 3-day market structure pool up here. So this is our 3-day. And guys, never skip the time frames. Always look at every time frame and actually look at the structure pools and how this is going. On the daily, we have nothing, because now we know that if we break this here, this high, this means that we will get up here to our 5-day high. So now we can say that this is our level 1 market structure pool, like the 3-day. And now we can analyze what is going on here. Can we refine this level 3 down? And yeah, we can. This is our 18-hour market structure high. We SFP'd it, got a reaction away. So we extend this high. Yeah, and now we can see here our 12-hour broke back to bullish. And on the 12-hour, we can now expect something like this. And this break confirms the break to the 18-hour, and the break to the 18-hour confirms to the 3-day, and the 3-day to the 5-day. So locally here on the relatively higher time frame, we are bullish. So we can look for accumulations going up. I can see a little order block here where we tapped in. And maybe, so how I would look at the market, here we have a structured move which got mitigated here on a lower time frame. If we zoom in here, we will probably find a refined demand. And from here, we did actually not hit that. So what did we do here? But we can keep it on the chart for now, because this is a pretty significant move. We got a sharp move down, V-shape, move up, recovery. So yeah. Well, here's nothing really special. We did not grab anything from here. So basically, this is a pretty bad low because it didn't do anything. It did not grab demand. It took a little bit of liquidity from here, but not really. Here the demand already got mitigated. So basically this is a very, very bad low. It did not do anything. And contextually speaking, this is good for our higher time frame, because this means this low will get taken out in eventually. So let's get back. And now we can look, as I said, for maybe an accumulation that brings up us up to the 18-hour high, for example. I can see we have a little model here. Let's go in. Even though I won't put this on my journal, because yeah, I did not proper backtest it, but we can just go in for educational purposes. So what we always want to do is to look on the higher time frame, on which time frame this range is valid on. So on the 1 hour, I can see it's valid. On the 2, up, down, up, down. So this is a 2-hour range. Up, down, and 2 candles down. So here we broke 2-hour market structure. And you could think that this is the tab 3, but that's why you always have to look on the highest time frame. This could not be tab 3 because there's no 3 candle rule up here. We got it here, so this is our third tab. We extend our range to the second high. Yeah. And you can already see a pretty nice curve going up. I can see a relatively higher time frame demand. In an actual trading environment, I would look at something like this from maybe a partial take profit perspective, but a demand like this on the lower part of the range does not invalidate the whole range. And we always have to look the highest time frame. This range is 1 hour and 50. So this meets our requirements of minimum 1 day duration from tab 1 to tab 3. So this looks nice. And let's see this. Yeah, put this like this. Okay, let's zoom in here. So this is our main low, and we can now analyze the structure from here up here and look where the market structure break would be. So in a 50-minute we can see we have, let's go on to 30. So we have this. So the 30-minute broke here, but basically this is the same like this. So if you would wait for the 30-minute market structure break, you would enter like down here. So this risk to reward is not there. Yeah, so basically what you have to do is to analyze now the structure from here to here and look if there's any high quality breakout structure. And now if you go on a 15, we can see that we don't actually have any valid structure because we have 2 up. This is the lowest point, and here are the 2 candles, so this does not work. On a 10, it would be this low. But look at that. On the 5, we have this. So this is better. This is our 5-minute. And now maybe we get some structure here where we can refine our entry even more. On the 3, nothing. On the 2, nothing. On the 1, I can't get on the 1. But yeah, so basically you would have entered here on the 5-minute, but yeah, this candle closes down here. Here we have our structure supply, which we came back for. But what we can do, since we are here in a confirmed Model 1 accumulation, where the entry was a bit sketchy, because you could have entered here on the candle, which is going down. Maybe you would have been filled here. You normally don't enter if the candle does not close, because what we could do is like liquidate, take the liquidity and shoot back up, and then make a massive SFP, for example. So you don't want to enter on an aggressive candle if this is not closed, but this would be like a 2-point R trade. But what we can do, since our level 1 market structure was here was a break which we SFP'd initially. So an SFP can be temporary, and if we're going to move away, we can extend it, for example. And we can look at this retracement here for potential re-entry perspective for maybe level 2 breaks. And look, I can't go on the 1, but on the this would be, yeah, so basically these candles are all inside of this one. I don't know if we would go to the 1 minute if there would be valid market structure. Let's say there were valid market structure, then this would be our level 1 break, which we broke in an aggressive manner. You always want price to make V-shaped moves and break aggressively, leaving behind supply, which we immediately mitigated and went down. But this could be an entry right here. Let's say here. Now you can put your stop loss above this high, because if we go above this high, this would mean that we will break this high. I can see we have some more supply in here, refined supply, but yeah, I would trade it like this for a nice 3.5 R, and yeah, we already know that this trade is going to play out. It really took his time to go down. It even went up. What did it do here, the price? Well, it front ran that, but we have a little order block here, which we mitigate. Here we broke back to bearish. And there you can put your stop loss above here and basically be risk-free, but we went in some sort of a redistribution here with some sort of, I don't know if this was actually tradable, but this looks like a redistribution on the discount section of the range. And there we go. Technical target was hit. So yeah, from here now on, we just click our way through the time and look if we can catch, for example, some accumulation down here. Yeah, so let's go to a lower time frame. Let me take a sip of my water. So yeah. Interesting. It took the liquidity from here. So this is some sort of a market maker continuation model. What this means is that we get the distribution, grab the liquidity from the opposite range point and shoot back up. So what I would look for is a move down to our demand level. We have here a liquidity level right above the demand that we can, yeah. So we got a rejection away, but this isn't a range. If you look at this horizontal price action and this move down, this looks more like a range. This is just market structure pointing down. And there wouldn't really be the 1 hour, 1 day range duration requirements. So maybe if we get a nice move down here, we can get some sort of range, but I think we are just going up. Nothing I would trade here. I don't really like to trade the lower time frames below 1 day. There are exceptions where you can do it, but here there is not really. Here is some sort of a distribution we can see, or more like this. But this is nothing that we can trade, but it's nice to see, because in order to get from here to here, we need some sort of a distribution, etc. We grabbed liquidity from here. We rejected from this structure supply and went down. So nothing what we could trade, but it's nice to see. So yeah, let's keep looking. This is a little demand, but nothing special. But maybe we get a reaction. Here we took some liquidity from the left. This could be a range. But yeah, it's lesser probability because we took out this low. Would be better if we front run it and went up then, but we can still look at this range. Maybe we get something, but does not seem that we will get anything. So yeah, we can delete it. So we did not get any accumulation here, but we got a confirmed from earlier in the video. We know that we confirmed the 12-hour break. We broke it aggressively. Let's see if we have some thing here. Yeah, I can see some demand. So what we can look for is maybe, as we broke structure now, we need to break our 18-hour. So we need some sort of accumulation for the next leg up. Let's go down the time frame. And here we can even refine down our demand. No, we cannot. This is an inside bar candle. Maybe on a lower time frame. We can't go to the 1, but no. Maybe on the 1 this would be valid structure, but we can put it there and look for a reaction. So often, if you get this overlapping effect, we will reject or get a support from the upper section. Above this, there's only liquidity. So if we don't get an immediate reaction, or from here, I would say that we will take out all these lows. But yeah, let's see. Maybe if you get a nice move down into the support, we can trade some sort of an accumulation for the next move up. It's not guaranteed, but maybe, but seems like not really. We got a little accumulation here, model 2 accumulation, nothing I would trade because it's like 2.5 hours, but you can see these models are everywhere because market maker have to fill their positions and move from A to B. No, but nothing here. Just rangy price action. We could look at something like this, maybe. And ranges can have lower time frame ranges in ranges. So we got the little accumulation on the bottom of the range, and well, not really a distribution, but distributional price action here. Went down. This did nothing. Let's see what we will get here. Oh. Aggressive push up. Is this still valid? Let's see on the 1 hour. Now again, we have to look on which time frame this range is valid on. So on the 2 we have 2 up, down, up. 3 we have up, down, up. On the 4 it is not valid. So on the 3 this could be a valid range. We SFP'd, or we did not close above the DL tool, so this could be a potential range. Now we look for model 2, point of interests. We have an order block up here. For point of interest, for model 2s, you preferably want it to be around tab 1. So this is a bit high up, but maybe we get something more locally. Yeah, so we don't have anything here. On the 3, we have here a little extreme liquidity. And I think that's it from a model 2 perspective. But yeah, this is pretty nice. We got here some equal highs. Oh no, this took the high, okay. Here we got a little distribution model that pushed price down. I can see we have some sort of demand here. Maybe we bounce from here, go up, mitigate, and yeah, so this is a pretty nice range. Let's put the dots on. Yeah, this is a pretty nice range. We got the accumulation down here and some sort of liquidity curve. If we can keep the curve going up here, would be really nice. So let's see what price action will do now. So we bounce from the demand. Yeah, so you don't want to trade if we already took major liquidity from the range. We have some liquidity down here, some lows, exactly these 3 lows, but I would need to see a really, really nice return to zone coming up here and a nice breakout structure. But let's see what price will do. Yeah, okay, this range is not valid anymore for me, but we can still look what will happen. Yeah, you can expect something like this. We ranged here for quite some time. Yeah, one day, 15 hours. We grabbed the major liquidity from here, leave some buy side liquidity above, and this is a reaction. There wasn't really resistance till here, but this was so much liquidity and we took it all from here. So basically, yeah, no trade here. Let's lead it, and again we front ran the demand. Okay, here we SFP'd the 18-hour market structure pool. Yeah, so we can look for some sort of distribution here, maybe to get down here. This idea still is valid. We can maybe get an accumulation down here that actually makes the breakout structure. So yeah, let's keep looking at the price action. Is the recording still valid? Yeah. Oh, we are already 40 minutes deep and took no trade. Yeah, so let's see if we can get anything here. That's nice, very, very nice liquidity. Holy shit. This is beautiful. So we can look for something here, but this would be very, very low time frame. Yeah, and there's no valid range here, but let's see. Oh, we're going even more down. Okay. So as I said, if we don't reject from the upper part, we will take this liquidity, just because as you can see, this is a nice structured move up, and this was a slow grind with a move up. So basically we disrespected the demand and took out all the lows. Yeah, but still I don't really like to look at something like this, even though it could be valid, but this is 5 hours. Nah, I don't like to trade these low time frame models. But yeah, this is in a pro environment. Why? Because we had the demand. We can expect on the 12 hours a lower high, a higher low for a higher high. And this is a range, but yeah, nothing I would trade. But there we have our model 2 demand retest. Yeah, but you can see here we got a little distribution. Again, nothing I would trade, but we get here another distribution on the range high. The lower time frame distribution created the second tab, which had its own little accumulation. This will get messy. His own little accumulation on the second tab, which created, and again, a distribution that created the third tab of this accumulation. So guys, you can see these models are everywhere. It's nice to see them play out. Yeah, so let's see. We will probably get the move up. If not, we can look for mid time frame accumulations. Yeah, here we got a redistribution to grab liquidity, and again, here's nothing but liquidity. And now we are going up again. Yeah, I was looking at something like this. But yeah, this is all very, very low time frame. Nah. Here, this looked like a little PO3. But yeah, this looks a bit ugly, but you have two tabs, a nice well, there are some lows. So 1, 2, 3, 4. So there are some lows. Up here we got a manipulation range. With our 1, 2, and 3. And zooming in, we had here an order block. Where we rejected. Can I go to the 1? No, I can't go to the 1. So yeah, here we SFP'd, so we have to use, and here we broke back to bearish. We came back for the supply. Very nice to see how price is leaving here liquidity. And again, we can see a little model 1 here to grab the supply. And go down. And here you could trade your SL here. There wasn't really a partial take profit because you entered really down here on the range. You preferably want to enter like here. You can de-risk on the lower time frame range and take the full take profit down here. But this would this require this only had like 17 hours, so it is lower time frame. I don't know if I would trade it in a real environment, but it's nice to see how these models get respected. And there we go, we hit the take profit. Again, looks a bit like a market structure continuation where we take out the lows and again go higher. Yeah. Took the low again. Oh, nice. It took all the lows. So it wasn't a market structure continuation. But yeah, the way we are coming down, it's more favorable for usually for a downside, but as we know, we will break this 18-hour. So we can look for some sort of accumulation here. Even though, yeah, we got a little distribution model on the high here, and we have an liquidity level here. So yeah, nothing special. Yeah, this all can be demand, but we already mitigated here. So yeah, let's see if we can get an accumulation here that is actually tradable, but seems like price is moving up again. Okay, so nothing is happening right now. Again, this coin is distributing every time. Like every trade we could have gotten was a distribution. Nice. Even here again, technical target hit. So it isn't really a tradable distribution, but you get the point. Distributional price behavior, I would call it. And again, a move up. We could look at something like this, with this nice liquidity build up. And yeah, there's nothing really here. Well, this could be an order block. It did grab the extreme here. So we had a little supply chain here. we mitigated and again created supply. So maybe, no, we already reject from here. Maybe we get something in here that we can actually trade. There we go, but yeah, okay. And again, a move up without an accumulation. So what this basically means, in this whole move up, we did not get any accumulation on the pivots, not a tradable for us, I would say. And we're moving up. So higher time frame wise, this is actually more bearish than bullish. Why? Because there was not a valid accumulation. We had here some sort of an accumulation, but not a really clean one. And this, yeah, well, this was 33 days, but this is not bullish at all for the price. Let's jump in again. And you always want to check the higher time frame here and there to not lose the track and to see where we are right now. So let's continue the backtesting. And you see we are here. We went over price action since, well, these are 18 days of price action, and we did not get a valid model besides here. This was a nice model, but yeah, I won't put this on the journal because we already saw it and I did not go over it in live price action. And you actually, if I see it like this, you don't want to enter in the middle of the range. You really don't. You want to enter on the premium, but yeah. Interesting. So here we are forming a range again. Again, lower time frame, but we can look at it. Okay, it went for model 1. Technical target hit, and now seems like this coin always wants to distribute to get the liquidity for the next move up. Now we are moving sideways, leaving some liquidity, but nothing special. Maybe we get something in here, but yeah, again, yeah, let's see. For an accumulation, I would actually want all this liquidity to get taken. This is the opposite of what you want from an accumulation. Yeah, okay. It's not valid anymore. Again, distribution, take the liquidity, continuation. Insane. Okay. So this is our 3-day market structure. Okay. Always be aware of your higher time frame. So again, leaving behind some very nice liquidity. If we get a high probability accumulation down here, we can trade it, but this is really the worst coin to backtest. I'm noticing. Yeah, so here this whole section is demand. Can we refine it down? So you don't always have to refine it down, but you can look at the block itself and we can see here we have a nice aggressive move. Yeah, on here we had a little distribution and here have some refined demand in this block. Below here we only have liquidity, so again I would expect a reaction from here. If not, this will get taken out probably. Let's see what we will get. And there we go. Put the reaction away. Yeah. Let's see. This could be again a distribution where the range starts with an own little model 1 that creates the first tab. We went up, took the liquidity, let's see. So yeah, here is our extreme liquidity, we took it, and yeah, we have a pretty low time frame structure supply. Yeah, it's only on the one, but maybe we get a something higher time frame wise, but it does not seem like it. Yeah, we can put it on the chart, but yeah, there is nothing really for a model 2 perspective. Well, we have here our next lower high, so this is a nice POI actually, because it's located around tab 1. We can see what we will get here, but it's a bit counter context since, oh no, actually not, but we got a pretty nice move away, but we are in some sort of support here. So let's keep that in mind and look at the potential model. The way we are coming down here, leaving behind some liquidity, range duration as for now is 18 hours. So maybe we will get something here. Let's see. Did it froze? Ah, okay. Let's put it a bit slower. So we are having some, yeah, okay. This was New York PM. Yeah, this is after hours. So we got a move down, but put in a low here, some lows. Demand. we grabbed the extremes here, got a pretty harsh reaction down, and there's no is this valid structure? So we're going up, went down, but took the liquidity from here. So yeah, would so basically this is a poor breakout structure for now. Yeah, okay. So we have some supply here. So what we could do is something like this, coming up, mitigate the supply and go down. This is still after hours. So let's see. Let me put it on 5x. So we don't have any structure here. We got a bounce from the demand. Let's see. And a Model 2 can always go over into a Model 1. We are forming a pretty nice range. Range requirements are there. So let's see. And what you don't want to trade a failed Model 2 that goes again over into a Model 2. So at this point, I would want to see a Model 1. Yeah, there is some sort of structure supply here. Which we rejected on. And we have, this was still after hours. Yeah, we have a nice local build up here. Is there some sort of demand that could hold price up? Yeah, this move can be seen as a manipulational move. We have a nice topping formation here and a 10-minute OBIF. Yeah, so let's see what price wants to do. On the one, we broke bearish here. Let's see how this looks. So basically we have one low, 2, 3. We have some sort of demand here, but nothing I would really use like that. This range is valid on the 2, the 3. Here's an unfinished candle, so this could be a nice target. Yeah, I think we got a little distribution model here. Range duration is 1 hour and 1. . 1 . yeah, I would give it a shot right here. Candle closed here, so yeah, this would be the trade. Now we got our first trade after basically 1 hour of backtesting. Let's see if we can get ourselves a winning trade. Now I don't want to rush the price action, so basically you put it like on 3x speed and look what happens. Yeah, so we had some supply here, and I think this whole thing was 3 minutes, and I think it was 10 minutes here, but it got mitigated on the next candle, I think. Yeah, so nothing I would put on a chart for now. Let's see what price wants to do. This was, no, this is still not Asia open. So let's see what price wants to do. We mitigated the supply. On the one, this is our low. We SFP'd it. Did we create? Yeah, we did create some more supply again. Exactly. Well, I don't know if here Asia opens at 2 or 1. Let's see. Because we have winter time, but it seems like this is still everything after hours. So yeah, let's see what price wants to do. So yeah, we SFP'd again here. Let's see. So on the one, we SFP'd here, the low. Got the reaction away, so we extend our low. This is a very poor break. We can thrill our stop loss to here and de-risk from 0.618 to 0.3. So basically we are already risking 50% now. Let's see what the trade wants to do. Asia opens. This was close. And there we got stopped out. So basically, yeah, we did not manage to enter here. Basically, we lost 0.5. As I said, we are in some sort of support, so this was a bit riskier, but yeah, this is a game of probability. Now let's put it on. So it was sold on the 18th of July, 1824, or was it 20? No, 25. At and it was a model 2 distribution. We got the confirmation with supply and demand and the return to zone. But looking at this on a higher time frame. We got some lows, but the move up here was quite aggressive. So yeah, basically here was some sort of return to zone. It was worth a shot, but yeah, we failed to go down. That's how it goes. So it was more like the break of structure. Yeah. Did we had a range inefficiency? Let's see. Well, it wasn't a confirmation for this trade, but it's often nice to look at the range profile. And yeah, we even broke back into the volume profile. You preferably want to enter a model 2 inside of the range, not outside of the range. So reflecting on this trade, we can see our 2-minute market structure. Yeah, it would be better to wait for the 2-minute break and then maybe enter on a level 2 break, but this would be the safer route. So basically we broke here the 2-minute structure. You could have waited for a level 2 break, but yeah, I think it's because of the context that is not really high probability. We SFP'd here, and again, as I said, this was a very poor breakout structure. We did not really break below, and this was more a choppy price action. Got a move up, demand creation, took the low, went up. So what we can say, it would be safer. So it was a minus 0.5. So what we can say, it would be safer enter in the range and take the higher time frame or the 2-minute break instead of the 1. It would be safer. And as we just only was SFPing the low, it would be better just to get an actual nice break. Like here we got up and got a nice break with supply creation. So yeah, let's put back the trade. This was a trade. What I like to do is to copy the link from this picture and put it here. Yeah, enter in the range, wait for a high quality breakout structure. Yeah, okay, and let's keep going. This also could have been a model 1, but yeah, we did not manage to break any structure here. So let's keep going. So there is some sort of accumulation, but it's only 9 hours. So yeah. very tight price action here. For how long is this going already? 1 day. So maybe we can look at something, but yeah, this is so tight. Look at the difference. Here we got some space, nice moves, and here this is just choppy price action the whole day. New York open. No, this is Asia open. Okay. And again, a distribution model, but nothing I would trade 5 hour in duration. What we could get is something like this. Nice duration over 3 days. If we don't just shoot up here. Now we need a nice break inside of the range, but yeah, again, no real accumulation, just moves up. Higher time frame wise, this is, yeah, let's look at a higher time frame, maybe 12 hours. So remember, we broke 18 hour, we broke 3-day market structure, and here our 5-day is right here. Day break of structure. Or was it? Well, on this move, it is a weekly high. Let's see. It's even a 2-week high. Okay, so this move is a 2-week high, not a 5-day high. 2-week break of structure. So pretty significant, but still it's only on this move up. So what we can still expect is some sort of a lower high for a lower low. And any of these point of interest. And this could be the start of a range. As we can see, it's a 2-week range. Let's get rid of the equilibrium so it don't get messy. Yeah, so higher time frame, we broke local 2-week market structure. So this is the range I put on. Okay. Let's see what we are doing. So preferably we want a break inside of the range volume or profile, and yeah, so for now I would look at the distribution maybe to get inside of the range, but let's see what we will get here. Again, no, maybe, but is it a valid range? I don't think so. So again, we can look at the highest time frame, but yeah, we have two, but yeah, this this is too high, and these are not valid 2 candles. So yeah, this is not a range. Can delete the range and keep looking. We're setting up a nice range here. Yeah. So what often happens is that we have some sort of market structure continuation or exhaustion to the upside, and then we go over into a range. So let's see what we have here on the lower time frame. Tab 1, tab 2. Yeah, so we have an extreme liquidity pretty far up. It's extremely narrow to the second tab high, so yeah, we can put it on a chart and look what will happen, but this is not valid structure. This is valid structure, but we already took it out here. This is a liquidity high. A high that took liquidity is not liquidity. So basically, yeah, it's only on the one on a higher time frame, like a 10. This is extreme liquidity. So let's put it there. It's a 10-minute lower high, maybe. No, it's a 10-minute lower high for a lower low. But there is no supply there. So let's see what will happen. We have some nice liquidity here and here. Okay. So 1, 2, 3, 4 high lows. Let's see what happens. So we want a nice constant move up without creating demand. This is important. And this move, well, it seems like, did it create something? No, okay. So this is just a aggressive move up, but maybe it's structure supply on a lower time frame, but yeah, here, but we can put it there up. Well, these are all, no, here is, so this is a valid high because this is not an inside bar candle. What is the highest point? It's here, so it would be this, but here we don't have 2 candles down. So let's look at the 2-minute. No, here is no demand. No, okay. There's no demand here there, so that's nice. but I don't think, well, there are no bearish candles here, but wait, I think we have some demand here. Is it valid on the 5, on the 10? Yeah, it is 10-minute structure demand. And it's a pretty aggressive move up again in the after hours, but maybe we can get some sort of a manipulational range up here. Let's see. So this is our low. Let's delete the range. This is our low. It is a 2-minute low. Okay, we broke back bearish, but this again, it was a slower move down. We created some supply here, which for now we are rejecting. Let's look at the range again. Let's not make the same mistakes 2 times in a row. And let's see. We broke into the range. So now let's analyze again the break. So basically we created supply on the move down. It is a slower move down. So if we can get a hard rejection, maybe bounce, get up, I would look to short this. So let's just analyze price action. So we are ranging here. Yeah, I don't really like how we are coming down. That's the opposite of what you want to see. So let's see how this plays out. Just look at this move into the 3rd tab and look at this move down. And it's kind of accumulating, coming into this demand. Yeah. But it's either way all a probability game. So maybe this plays out, maybe not. We will see. Either way, I would not have traded this. I can say it. I can be honest here. So even though if this play out, okay, it's nice to see, but look at that. You don't want to see it like this. This is the exact opposite. So what could happen is we accumulate here. For how long are we? So yeah, this whole range is 21 hours, and 1/5 of this range we are just slowly grinding down. Maybe we get the move down, but this will get taken out. And let's go to a higher time frame. Well, it hit the technical target. Nice. I did not enter because of the poor, for me, poor break of structure. But yeah, so let's analyze again. Because it's often different if you look at the price action live or you analyze it back. So basically we broke 2-week high, got a distribution exactly here, and got the market structure continuation. Yeah, but look at this. This is horrible. Actually horrible. Well, yeah, well, so this demand is not really high quality. It is demand, but nothing I would put so much significant on like on the beginning. And here well, let's see, we got some supply that I did not see. And here some more structure supply that we mitigated. We grabbed the liquidity from the supply. Got the, well, we broke the lower low here. So again, we broke again. And here we got our level 2 break right here. So what, well, I was very focused about the slow move down and did not notice that we were creating supply coming down, even though there was so much liquidity here building up. So yeah, basically you could have entered here, maybe on a little retest, put the stop loss above here, target the range low for a nice 5-hour trade, or you would, and then you can, after this, you can trail your SL down here and yeah, only risk 50%. And then there was a re-entry opportunity right here coming down. So you would enter like here. You would put your stop loss above here. Why? Because this is a new high created. It took liquidity, it mitigated the supply, and this is even higher RR. Yeah, so 6% or 5%. in hindsight, it's always easier to see the trade. So that's why we backtest, to collect data, to actually look at price action. And yeah, and this very moment, like 5 minutes ago, I did not see it. I have to be honest. I did saw the break here, the 2-minute break. We grabbed the liquidity, broke back to bearish a second time, went up, broke again here. Yeah. And here was a re-entry like this. Yeah, okay. Let's move on. So what would be nice is if we get a move inside of the range, maybe a deeper move into the range, and maybe we get some sort of model 1 going into the supply. For how long are we going now? 1 hour 30. Yeah, so I would say I will stop here and do another session maybe later today or tomorrow. So this is where we are ending. I won't cheat on myself. I won't go over price action and record it after. This is purely collecting data, making making it as real as possible. And as I said, I would not take this trade and this would be a banger with 5 or 6%. I took the L with 0.5 loss. So this is how trading is. Yeah. So in the end, it's all probability. Guys, you have to do this, collect data and see the price move. So when the next time I will enter this trade. Why? Because I saw it in hindsight how this broke structure, went down, went up, broke structure again, got a re-entry opportunity, took the extreme liquidity, went down. Even though this is not high quality, it still played out. Context-wise, it was pretty pro context. Why? Because we broke 2-week structure after a very nice long move up, and you can in these moments you can exceed your trade. You can take a profit, maybe even here at these lows, extend your take profit target, and maybe leave a runner for lower. Why? Because higher time frame is bearish, and this could be the starting point of our 2-week range. Yeah, so thank you for watching. See you in the next video. Bye.